Welcome to Amanda Spann's Minimal Viable Podcast, the show that gives you a real and relatable look at the world of tech and entrepreneurship from industry all-stars. This episode of MVP features Jim Stallings, managing partner of private investment company PS27, who focuses on innovations in the expanding wellness and sustainable living market. Jim will give us insights into his unconventional path into investing, his experiences as an investor outside of Silicon Valley, and the lasting impact of leadership on entrepreneurship. MVP is brought to you by Simplero, the all-in-one software for online entrepreneurs. Most digital coaches, consultants, and entrepreneurs are using 7+ online tools that still don't meet their needs. Simplero reduces the headache of product management by allowing you to host your mailing list, online courses, membership communities, marketing automation, and digital products all on one platform. It's my personal go-to tool of choice for selling my ebooks and courses, and I think it's pretty affordable, simple to use, and easy to get started. So if you like to experience less tech and less stress when selling your content or products online, check out Simplero at simplero.com. That's SIMPLERO.com. Now let's start the show.
Hi, Jim. Welcome to the MVP podcast. I'm really excited to have you. I think you are my first official guest from Jacksonville, my hometown. So I'm happy to have Duval represented on the show. People have been nagging me, you got to have more hometown heroes. So I'm very happy to have you today and to hear more about your story and for you to share your insight.
Yeah, well, thank you, Amanda, for having me on. And I just want you to know Jacksonville's doing great. We won a big game yesterday. Everybody's all excited. So we wish you were here.
Oh, thank you. Well, so I missed the game. Full transparency, I missed the game, but I caught all the highlights online, and I was like, man, the Jags are killing it. So I was very proud. I was saying, we've had many years where we weren't so great. So it was good to see us kind of crushing it. We got a good quarterback, and we're rolling.
Well, they just got to settle down, and they'll do just great. I think they just got to get through a couple things, but they certainly have the talent to compete, and now they've got a comeback in the a record kind of comeback in the books that builds confidence. So it's a lot like starting a company.
Absolutely. So let's get into that a little bit. I mean, I know I read a little bit about you, and I saw that you, before kind of jumping into your current venture, you had a career in the military. So I'm curious to know, do you think the military prepares you to be a great investor? Because I actually know quite a few people who've been in all branches of the military who actually have transitioned into entrepreneurship. So I'm curious to know your thoughts on that and how you feel like it shaped you as an entrepreneur and an investor.
Yeah, well, I had a wonderful and very rewarding career in the military. I went to the U.S. Naval Academy and graduated and got a commission in the Marines. And what I wanted to do, I got a chance to do. I wanted to get into the infantry. I wanted to be a platoon commander. I had a chance to do that in the Western Pacific, across Japan and Korea and lots of Southeast Asia and the Philippines. And so I got a chance to see a part of the world at a very young age with an enormous responsibility for some young Marines to take them into things and get them back safely. And then I went on to be assigned to a unit in Washington, D.C., and I got to see a whole different perspective from outside of the field side of the Marines to what goes on in the military in Washington, D.C., some of the political sides of it, but also the budgeting aspect of it, and had a chance to work at the White House for a short period of time when Jimmy Carter and Ronald Reagan were transitioning there at the White House. But it gave me a whole different view. I would say the thing you learn in the Marines or in the military in general is how to deal with uncertainty, because you get faced with problems that you have to solve. The other thing you learn is how to stay calm under fire. And in business, you're under fire every day to deliver something. You meet an expectation of a customer that you didn't know you had to, and things go wrong. So you learn how to stay calm, stay disciplined, stay focused. People galvanize around folks that know how to do that. And it also teaches you a lot about leadership, how to take care of your team, your people. We're reading a book here back at the office called Leaders Eat Last. And you learn that in the military. I mean, I didn't have to read a book. I just sort of grew up thinking that way. So if you can transport those learnings into a startup or into business, whether it's a fast-growing business or a small business or a very big company like I worked at IBM, and it really, really comes in handy. So I had a chance to live all of that and learn all of that, and it's a part of me today just like it was, 30, 40 years ago when I started.
So you said another thing that was interesting, it made me realize we have something else in common, is that I'm a former IBMer myself. And so my experience at IBM was really, really interesting when I was working in like hybrid cloud and marketing products primarily to entrepreneurs. And this was a really interesting time for IBM because IBM is traditionally thought of as Big Blue. It's still a really great company to work for. But they in the past few years they've really been trying to keep up with some of these tech giants and these startups that have grown so quickly. So it was a really big transition point for IBM, I found, in learning how to market to startup entrepreneurs and this new wave of entrepreneurs who are ushering us into a new era of business. And so I'm curious to know, how did you end up transitioning from your military career to IBM, and how did that offset your previous trainings? How did it prepare you? What did you get out of it? And would you recommend that everyone kind of even if you're going to be an entrepreneur, would you recommend that everyone, possibly pursue a career in corporate as well?
Yeah. No, that's a good question. I felt very comfortable going into IBM coming out of the military. And the reason was, back in those days, IBM was a big command and control kind of a structure. I mean, it was a tops-down, senior management, middle management, first-line management, and the troops. And that mirrored sort of the environment that I came from. And in a big company, you have to be really good at communication. Things are changing. It's a tech company. So you got to be able to tell the story so that it's believable and people can understand it, and then they can act on it right away. So you learn all of that in the military. So it was a command and control structure. It was, ever changing, ever moving. And at the end of the day, you got to explain it to the troops in a language that they knew they could understand and they can act. They can follow through on the vision. And so I felt like I fit in very, very well in the beginning. Now, as you know, IBM changed over time.
Really quickly. Really quickly. All the time, really.
Yeah, it had to flatten. It had to get more network-oriented. It had to get faster. So, you went through some of that. I went through a lot of that. And it was changing not only inside, because corporations had to get flatter and leaner just from a financial performance standpoint, but also the market was changing. Outside of IBM was changing. New technologies were coming to market faster than the company could invent them. And IBM was one of those companies that felt like, well, we were the company that was going to invent everything that was important. There were going to be a lot of things invented, but the important technologies were going to come from a company like IBM. And unfortunately, that changed. And we thought that in the old days because we had a lot of money that we spent in R&D, $5 billion, $6 billion a year in R&D. So, of course, the most important things would come. But what's changed, which is it leads to the answer about how did I get into venture capital. What's changed is there's a lot of capital outside of these corporations today. I mean, billions of dollars, our last count is 137 billion of new capital, venture capital, so far this year going into startups. I mean, that's an enormous amount of private equity. When you count the public equity, it's in the trillions. So, you can't invent, I don't care how much you spend in a corporation, you can't invent enough to combat what will come out of these companies when they're being funded at 100, 200, $1 trillion of capital flowing into these markets worldwide. So that's the other thing that changed. And I think what you're referring to, IBM's challenges now is it's the consequence of not being a part of the movement. And, I gave a speech just last Friday at a big company that's going through some of these challenges. And part of what I shared with them is you got to do all three things. You got to invent technologies inside of the company as rapidly as you can. Be prepared for some of them to fail and not feel bad about that. The other thing is you got to invest in startup ventures. The other thing you got to be prepared to do is spend a premium on mergers and acquisitions of disruptive or important technology. So you got to have a budget that can handle all three of those. And if you're not willing to do all three of those, you're going to get disrupted.
Yep.
And both are going to happen. Go ahead.
What I saw at IBM is first I'll say that I think you're absolutely right, but I think, IBM still does a lot on the acquisition end. They acquire a lot of companies, but I think they're short-sighted in that they're acquiring a lot of these companies too late. You got to get these companies and get on the ground and start vetting them and finding them and courting these companies, essentially when in their infancy stages, right? Because IBM has the talent to run these companies, right, and to grow and scale these companies. But, by the time you've gotten, you bought this company and you integrated it into IBM and got merged and everything like that, like someone is already producing the next thing.
Right.
And, a huge challenge at working at IBM was, almost everything, all the solutions that we use on a day-to-day basis were IBM products. And because they were IBM legacy products, it made things very static. It made things very stagnant. And we were operating a lot slower, especially when you're running a global corporation and your coworker might be in India or South America. It just makes things run a lot slower than they need to. And we're not operating at the speed of innovation. And so, in order for us to move forward and actually be competitive here, we got to ideate and be willing to get scrappy. And that was something I struggled with at IBM, full transparency, in that, I come from a startup world where I'm used to just saying, okay, however we have to get this done, we will get it done. And I don't care what solution I have to use, I'm going to get it done the quickest, fastest, cheapest way possible. So that was something that, I was really like, oh, why are we doing it this way? But, it's Big Blue, so.
Yeah. Yeah, well, it created an opportunity for me. And what we do, and it's created an opportunity for a lot of investors that innovation has changed, right? It's no longer just the big companies with the capital or access to capital that can go spend the money for lots of engineers to go invent things. So now the inventor is someone with a compelling idea that's looking at a new market or one that is stagnant that can be disrupted. So the investors are now looking for people like you're referring to that, they got the guts, the will, the leadership to go lead one of these things all the way through. Big companies are not isolated or left out of this. Big companies just have to go intercept some of these things very early and be prepared to change their model to embrace the new solution versus, blue washing the solution to make it fit the status quo. So that's the big change. And a lot of big companies have done this. I mean, there are ones that you read about and you hear about that have said, hey, I'm not going to get left behind in my segment. I'm going to reinvent myself. I read a great story this weekend about McDonald's. I mean, you think of it as, there were just a few years ago, people were saying nobody's eating hamburgers anymore. Nobody wants fast food. It's unhealthy. It's, all of the wrong things. And they're transforming that company, and the numbers show it. into a data-driven company. They sort of know license tags come through the takeout line or the order line, and they know everything that you've ordered every time you've come, your history, so they know what to recommend. I mean, they're going to a plant-based burger. I mean, so they're way ahead of some of their other competitors, and they're using the data of their customers and the 55,000 locations they got around the world and harvest that data to present a better solution faster to their clients. So they're not getting left behind. So these companies, and they've done like 3 acquisitions just this year in the space of companies out of the valley that are helping them just with this one problem of data. So companies can do it, and they're companies that being very aggressive about it. They realize they've got to buy some things at late stage, but they got to invest at the early stage, and they also got to invent. And sometimes you can get all 3 to fit into a single product or a single market. And so I just, when I left IBM, this was what I wanted to do. I saw some of the changes happening. I saw a lot of capital arriving, and then more importantly, I started, with my technical background, I was able to vet some companies and understand that there was going to be a buyer. There's an exit down the road. Now, some of the companies we looked at, that we realized there was going to be no buyer. It's just the market's not big enough, or the vision isn't big enough. But that was what I wanted to do when I saw this. Literally the innovation is now being done differently than it was 5, 10, certainly 20 years ago.
So what was the moment that made you realize, okay, I want to become a venture capitalist? Did you always know you wanted to do it, or was there like a catalyst that kind of sparked that change? Was it working at IBM and running into these like innovation challenges, or did you there was a moment outside of work that just made you think, oh, I want to invest? And I would love. I'm going to share a little bit about your company ahead of the call, but or ahead of the recording. But I would love it for you to kind of give a deep dive into like how you got into it, and tell us a little bit more about your company in your own words.
Yeah, well, we invest in early stage startups. The ideal profile is a company that's they're already in market. They got a few customers. They've got a product. They have a small team. It could be 2 or 3 of them, and they got a little bit of traction. They don't have a lot, but they got a little bit. And they've quit their job, and they usually come in and say, "Look, I know I'm onto something. There's demand for what I'm doing. I just need some seed money to get the rest of the team and to start my marketing campaign and improve my go-to-market strategy. And I need some help, Jim, on my go-to-market strategy. What channels should I be going after? Should I go to Amazon as a distribution platform? I mean, so they need a mentor, a coach, and some cash. And those are the ideal ones. We give them space. We give them Wi-Fi. We give them food. We give them an office if they need it. But more importantly, we give them access to myself and a team of specialists. We got a small team, some operations experts. We've got some financial experts. We got some media experts, some website people. So we just act as their first line of support in that first year after we give them the seed money. And it's usually up to about $250,000 of seed money. And then we go build out the first year game plan. How are we going to go to market? How are we going to spend that capital? Who are we going to hire? What are our expectations about customers? And that's how we sort of plumb the year. But we don't look further than like a year and a half. So we're very different than some of the stories you read coming out of Silicon Valley and some of those other places. We don't say, well, we're going to scale this company no matter what, as fast as we can, no matter what. We take the opposite view. We're going to prove the business model. We're going to work hand in hand with the founder to prove the business model. And we're going to take about a year and a half to figure all of that out. How do we price it? What's the next version of it going to look like? Who are our partners? What market are we going to serve? I mean, we do a deep, deep dive on a regular basis with the companies on that. Once we get that, after about a year, then we say, okay, now we're going to hit the gas. We got it working. Let's go raise the money or put in more money and take this to a whole nother level. And our mission in the first year and a half is let's get to profit neutral or cash flow positive. Because if we can't prove to ourselves in a year, year and a half that we can take this model, cover the development costs, cover the staff, and generate enough sales, then there's no way we're going to ever do that if the company is 10 times. Now, I mean, that's our philosophy. That's our thesis, as you would ask. But that's the value, because we know we can raise money if we get through the first year and a half and do a real serious Series A round for the company. And that's what we do. After about a year and a half, we'll do an A round of $1 million or more, and we take the company to the next level. So,
okay.
I mean, that is very different, I'm sure, than a lot of typical VC stories. We can't do 30 of those at a time because you got to be working each one of them very closely, and we have a feedback loop with the companies where every week we're literally, in some cases every day, but every week we have sort of a standing call every Friday. We call it sales calls, and it's really a check-in call on how is it working? Is the strategy playing out? What do you need? What did you learn? And we give them a lot of feedback. We also give them a lot of support, and then they run the next week, and then we check in with them, every Friday. So that's our model, and we sort of have worked this now for about 6 years, and we see the dividends because most of the companies, they stay alive, and staying alive is an important thing. Yeah, and that. I remember when I first started this, and I said I'm going to be a VC, and people said, well, 90% of the companies fail. I'm like, wait a minute, you got to be kidding me. I mean, I'm used to winning, right? I'm used to being, the top salesperson at IBM. I'm not going to lose 90% of the time. So our model came out of how do we ensure the company at least stays alive? It gets to cash flow positive. Once you do that, you can always add to it. You can lose money later, but at least you know how to make money with the product set that you have. And we go through a lot of iterations of their business model and business plan, but that's the essence of what we do.
So one thing that I noticed that you guys do, one, I think the model is really interesting, and I think it's a lot more intimate than you see with a lot of the larger funds, or even like funds your size. I think a lot of people miss out on kind of investing in their founders in other ways, and so that's something I kind of wanted to touch on, as I noticed that you guys have a leadership component to your fund. And that's actually something in recent memory I haven't seen before. And I think that I thought it was really interesting because a lot of times, funds will, and I consult a lot of funds on like raising their profile and their marketing efforts and things like that. And they're very, very, pressed about investing in their founders as founders. They want them to be the best founders available. So they build out this community, they build out this platform, they build out a mentorship network. But, I think investing in people as people is important as well. Like, are you a good person? And like, how are your leadership skills? And how are you leading both your employees and your family at home? These things are all equally important to the success of the company. And so I'm curious to know why that was important to you to include, leadership, like for your founders, as well as, creating a forum for other people who might not be investing in quite yet, but people who are the founders of the future, and, why leadership is so important for you to impose on them as well.
Yeah, and that's a good question because that's the other plank in our sort of platform here at PS27. So it's something we deeply believe in, and we talk about it. If you ever come to our office, you'll see, symbols and signage about leadership. It's my personal life philosophy. and it's sort of become the culture of the company in some ways that, it's all about the founder's ability to lead. It's not about their ability to pitch. Of course, they've got to be able to tell the story to an investor so it's understandable and believable. But when they leave the investor's office with money, they now have to go lead a team. And it's not just a team that's inside of the confines of their office. It's their legal team. It's their accounting team. It's their HR team. It's their board. So there's a whole set of constituents that are in their supply chain, right, that they've got to now influence and lead. And it's their personal character that matters the most when it comes to building a culture. And you can read every day in the Wall Street Journal or whatever your business, magazine is about failures around character and leadership and judgment. So we talk a lot to our founders about this because we share with them all the time. You can certainly grow the company, but there are a lot of companies that the founder doesn't turn out to be the CEO. And most of the time, it's not because they weren't the smartest person. It's usually because they weren't the best leader to take the company to the next stage. So we invest weekly in these sales calls in our founders where we talk about their style. Every one of them they participate in what we call peer-to-peer events every month. They come in and we do a sit down with them on some tactical topic. But usually it always goes back to, well, how is the team doing? How are you doing with the team? How are you doing with your partners? Every year they go to something called Leadership Week, which is a week-long leadership school. We talk about ethical leadership. We discuss emotional intelligence. We talk about high-performance team building. We talk about their communication style. They literally get up 4 or 5 times doing this one day on that topic, and they're presenting to a group. They get feedback. They adjust. They get back up and they adjust again. And then we typically bring in a very successful entrepreneur to talk to them about this topic as a group. So they get an exposure to it. And what we find is that people that want to grow, they thrive in this environment. People that think of this as sort of a lifestyle, being an entrepreneur, driving a Ferrari and having a yacht, they don't embrace this style. They think of this as some movie that they've seen in Hollywood. So we emphasize it because we believe that we're building a company around a person's leadership, and we want it to last a long time. And, there are lots of companies, they just don't last long. The founder they can manage 10 people, but they can't manage 100 people. And, or they can lead 100, but they can't get 1,000. And then when you get to 1,000, the culture is not as strong or resilient, right? So we talk about resiliency of cultures and the culture code. We spend a lot of time on that. All of the founders get evaluations every year. Every 6 months we sit down with them. We share a matrix on how they're doing. And then at the end of the year, we give them a grade on how they're performing as a CEO. Because the other part of our philosophy is that you can be a founder, but that doesn't make you a CEO. The CEO is a different thing. And we help them all the time understand that you can start a company. Doesn't mean you're the chief executive officer of that company. You got to earn and sort of generate the capability to be the chief executive officer. So we're constantly sharing with them, here's how a CEO behaves. This is how they measure their performance, measure the performance of the company. This is how they communicate the strategy and performance to their shareholders. And we have all of the companies that come through our group, they all form boards. And even if there's like 3 people on the board, we still have a board. We're teaching them, day one, you're accountable to the shareholders. I know you own 80% of the stock, but if you have one shareholder beyond yourself, you're accountable to them for a set of results. So, I mean, that's a mouthful, but that's something that all the teams will relate to. And we let them self-select out if this is something that they're not bought into. We go through an extensive screening process, so we typically, know. We ask them why are they doing it, and if it's, beyond the financial attractiveness of the deal, we have to buy into, is the founder bought into what's ahead of them? Because as you know, it's a lot of hard work. It's thousands of sleepless nights. So do they have the fortitude to deal with that, and the desire to deal with it? So anyway, leadership is the foundation of PS27.
Yeah, it's really interesting. I was reading an article earlier today about WeWork, and I don't know if you've read up on everything that's going on with WeWork right now, but a lot of what the article focused on is their co-founder, Adam, and his kind of rock star personality. And I think Silicon Valley and just the venture industry has this kind of love-hate relationship with the star founder, right? Like they often want, I find a lot of VCs want the founder who is like this charismatic, enigmatic personality that is going to go out and have the gall to take the risk, the healthy risk, and is brazen enough to challenge the company to go to the next level. But they also want somebody who's sane and who's a good leader. And so it just, upon WeWork filing, it kind of dove into like all of the madness that was happening behind the scenes at WeWork. And the misappropriation of so much of their funding, and how they were just essentially burning for every dollar they were making, they were burning $2 to $3. So it was a really, really interesting take on leadership, and I think in light of everything that's happening with founders that have been put on pedestals like the Elizabeth Holmes and the guys from Uber and everything like that. It's just interesting to see how things are kind of turning out with founders. Now, people are really doing the due diligence on not just what you built, but like you as a person and investing in you as a human being. So I think, there's validity to everything that you said, and from the fortitude component of it to, who the person is internally.
Right. Well, and there are lots of them. You named three. There's Uber. There's Theranos. I mean, there's dozens of these, and this is why the failure rate is 90%, in my opinion, is because many people that gravitate to the startup community, they want to be entrepreneurs because of the lifestyle that is perpetrated by the Valley. Right. So, I mean, the view is I give you $100 million, you got to sort of act like you're running a $100 million company, when in reality you're running a non-profitable entity that is struggling to make its first profit, and that's how you need to live. Not this other, So, yeah, we're very familiar with WeWork. As a matter of fact, at Leadership Week, that's one of our case studies that we're showcasing. Because we're exposing at Leadership Week, we expose them to great behaviors and we expose them to bad behaviors, just so they know, the choice is really yours. This isn't like, people are going to make you a good leader or a bad leader. You're going to choose. And one reason why we go through emotional intelligence is to help them understand who they are, become aware of the gaps in how you react to things and people, and how you communicate to people and how they react to that, right? So, because you can say things in a way that cause people to respond to something in a negative way, and it's how you said it versus what you said. So we share that with them early on in their life. So, I mean, they can turn out to be whatever they choose to be and work towards, but at least they've heard it from us first. And, one of the joys of my job is I get to see them grow. Mm-hmm. And they come back after they've done some extraordinary things, or a year later. I mean, we take them through a very disciplined, highly focused exercise for about a year and a half, where we literally act like they're it's almost like a fitness coach. You know what I mean? You hate your fitness coach. They're your personal trainer, right? Your personal trainer is meeting you every morning at 6 o'clock. They're making you run. They're making you do sit-ups. They're making you do push-ups. And, you're sore, every part of your body aches until the summertime comes and you put on your swimsuit and everybody goes, man, don't you look good? And, we always, share with our teams, our goal is to get you to a point to where you're in front of an investor and they go, wow, this is the real deal. So now it's a lot of hard work getting there. So that's why we work so closely. It's also why we can only do a few companies at a time. We're not like some of the other programs where you go through an accelerator and it's 60 in a class or a cohort and it's 20 in a cohort. We're very opportunistic. We pick companies when they're ready. They come into the process when they're ready. They exit the process when they're ready. And some years it's 0 companies that come in. Some years it's 3 or 4. It's just we get to pick. We get to pick. The ones that we want.
Now, question for you. So, what is it like being a VC in a market like Jacksonville? And have you ever been tempted to kind of relocate the fund or move to another location that may be a little bit more? I mean, I think Jacksonville is an entrepreneurial city, but we may not have as many tech startups, and that's changing. We're starting to get a lot more tech-enabled startups. But what has it been like for you building in a market like Jacksonville?
Yeah, it's been interesting. When we first started, the only companies that came to see us for money were what I would call small businesses. They really weren't startups. They were small businesses looking for loans. And they were mostly mom and pops, what you would call a mom and pop lifestyle type business. And they needed cash for marketing, or they needed cash to sort of build out the next generation of products. But they weren't thinking global. It was more of a regional. Those are the first companies. I mean, a few startups came from the universities, and, a couple of them we invested in. What's happened, though, is as our reputation has grown and as people just become aware of, this model in PS27, we get now companies coming to talk to us from all over the country. I mean, we get a lot of Austin, Texas, a lot of Southern California, a lot of New York, Boston, a lot of North Carolina, Atlanta, and certainly cities across Florida, Orlando, Tampa, Miami. I mean, we've got a intern that works with us, and it's a full-time job tracking all of the pipeline now that's coming in, vetting, because we have a 3-step vetting process. So just managing that on the front end is it's sort of rapidly becoming a full-time job for someone. So it's changed. Now part of that is just time, and once you do deals, and if you have some news in the market about an exit or whatever, people, the word gets out. The other things that's happening is, one of the phenomena that we're living in right now with a lot of the big tech platform players racing to do an IPO, a lot of the VC money is chasing a very small number of really high-value deals. Mm-hmm. And you've seen that with the, I don't have to run through the list, but you've seen that. So the other thing that's happening is a lot of the angel level investing, it hasn't changed a lot, and a lot of the mid-level investing has not changed a lot. But what has changed a heck of a lot is large deals being chased by a small number of large valuations being chased by some VCs. So that's left is a lot of mid-sized startups not getting funded. And what you're finding is funds like ours, we're now an attractive place to go. They may have to give up some valuation expectation because if they're when the word gets out that there's another Slack or another, Uber coming and another, WeWork or whatever, the word within that network sort of consolidates on a few of those deals, and people that are looking for just $1 million or $5 million or less, they get left out of those conversations because the big money is chasing, $1 billion valuation and not a $25 million valuation. So we're seeing it, and I believe that's one of the reasons why markets like Jacksonville is becoming very attractive. The other thing that's happening is even if you fund your deal, regardless of valuation, you now got to feed people. You got to pay a staff. You got to hire, assistants and customer service people and operations people, and they can't afford to live in some of these markets that have been traditional venture capital markets. They can't afford it. I don't care what the valuation is. They just can't afford to raise their kids and, pay for gasoline and buy a house at a reasonable price. So they're looking to places like Jacksonville, which may be a second or, second tier market. And our pipeline is full. And I think it's because of all those factors that, teams are realizing, I may not want all of that glamour because it's hard to manage that glamour. And I just want to go build my company. And if it's successful, I'll get to a multi-million-dollar valuation, something that's substantial later. So we're seeing a huge inflow of deals in pipeline now.
Okay. So what advice would you give to entrepreneurs who are building in markets like Jacksonville, or alternatively people who are thinking about starting funds in a market like Jacksonville?
Mm-hmm. Yeah, well, my advice is regardless of whether you're in this market trying to start and build a company or you're in another market and you're thinking about coming here, the good news is you can serve, with the internet, you can serve your customers from anywhere. You don't have to be, in California to build one of these things. You don't have to be. The capital flows to where the idea is and where the founder is. The biggest challenge is talent. How do you get access, particularly if it's a technology company, how do you get access to, sharp, up-to-date talent that can solve problems on the technical side for you? So that's been a challenge, and I think it's getting less so of a challenge. And we're attracting companies, and that challenge is shrinking. But that's the biggest challenge. The challenge is not capital. Once they sort of get their first round and they start growing, the challenge is not capital. The companies have been able to raise the money, and this market also becomes very attractive because the capital goes a longer way, particularly if it's a people-intensive thing you're building. It goes a lot further down the road. But I would think hard about the kind of talent and be able to build some inroads to either schools, universities, other companies to be a pipeline for talent, because that tends to be one of the bigger challenges that companies, here run into, and companies trying to move here. I'd partner with some of the local large firms on projects. I'd get the word out that you're here so that you can get a pipeline, because a lot of the young developers, they don't want to live in California either. Or Boston. They want to go to a place where, it's affordable and they can, they can get a nice place to live and not have to spend all of their money on just that. So, but that's the basic advice. Just understand your talent challenge right up front and have an offset to that. A lot of the talent is offshored now. So you can have a relationship with a managed service provider that's not in your market that can do a lot of the development work and technical work to get you going in the early days. Now, you can eventually consolidate that back in this market, but it can get you going. And again, your dollar goes further when you do that. That's an attractive market. I mean, I'm a believer that this will continue to evolve. It'll continue to grow. The university has got a entrepreneur program. Mayo Clinic has just launched an accelerator. So for those specialty areas like biotechnology, there's sort of a ready-made partner in the market. All of the hospitals that I deal with, Baptist Hospital has got an innovation team. So I would form those contacts and relationships, because that's how you build your team. You're gonna draw them from existing. You're not going to grow them, all of them, from the ground up. You're gonna draw them in from some other existing firm or institution.
Okay. Now, another question. I mean, this is kind of a shift from what we were just talking about. It's relatively related. I actually had a conversation right before our session today with a managing partner at a fund, and she's a Black woman, and we were just talking about the challenges of getting Black professionals into venture capital and about how we increase that pipeline, right? Because there are programs that train people. I feel like venture capital, to some degree, is an apprenticeship industry. Like, people are kind of, like, you don't really know how to invest. I mean, everyone has their own thesis and their theories and things like that, but you don't really learn the framework of investing until you're kind of in a fund and you're kind of figuring out things as you go, and which formulas work kind of best for you. And we were just talking about the barriers of entry for a lot of minorities, not just Black women, just minorities in general, getting into VC, and the challenges about raising funding and raising a fund itself, and then and finding like limited partners, and then getting the training you need, or even getting an internship or an apprenticeship and things like that. And then a lot of these things are cost prohibitive. There are programs out there that will train you and educate you on and provide a framework for the nature of the industry and the business. But if that's $12,000 to $15,000, most people don't have that laying around to spare, right? You may have had that for your degree, for college and everything like that, but postgraduate school and things like that, and you're starting your first job, you don't have that money laying around quite yet. So how do we increase that pipeline so that we have a diverse set of investors to match with the diverse array of founders that we're starting to see?
Because I think it's a very good question about, how do you increase the representation and diversity of just venture capital, right? So, because the issue is how do you get more Black and women entrepreneurs to get funded? And one of the quick answers to that, or solutions to that, is you get more African American men and women that are investors, right? I mean, it's like anything else. So that's part of it. My recommendation is that a couple things happen, and this is my advice I give to a lot of people like myself that are retiring, or people that come to me and say, I want to be a VC like you, Jim. And I tell them, look, go join an angel investment group. And they're all over, they're in all the communities. Almost every major city has got an angel investment group. Some have several, and some are very specialized. But join one as an angel investor, become a member, join the Angel Capital Association. It costs some money. If you join an angel investment group, typically you get a membership to the Angel Capital Association, and begin your education there. Because what you'll get a chance to do is, first, the entry is fairly low. There's probably a nominal fee, $1,000 a year to be a member. And then there's some minimum you got to invest if you're an angel investor, $10,000, $50,000, something like that. And if this is an area you're interested in, you should have those resources available, and just sort of get into the flow of due diligence and what is the specialties that the angel group is interested in, and what are the structures of different types of deals, and what is the cap table. I mean, all of the language that goes with this, and you learn from some other people that are in there, and they're not, some have funds, but I would get into one that doesn't even have a fund. And maybe you join later one that truly has a fund. Because the real angel groups they're organic, sort of small, and everybody works on the deals. There's a lot of transparency because there's no executive or limited, there's no managing partner, there's no limited partner that's going to go do all the work. So you get a chance to do the work, get your hands dirty, and understand how you structure one of these. And from that learning, you can then decide, do I join a fund and become a partner? You can invest in a fund, or do you go create your own fund? And what we did was we just created our own instead of, putting our money in some other fund. But that's the fastest way. It's like joining a book club. I mean, you want to read more books, join a book club. It'll make you read books, okay? At least the ones, I'm involved in. So and by the way, when you join these angel groups, they're typically connected to a regional fund, and that's when you start meeting, you put people in your network that can now either get you on the recruitment cycle to join some of these funds, because they're now reaching out to, they're looking for diversity in these funds, and they're looking for diversity in their partner structure, and that's how that's one way to learn and get visible. And I encourage people to do this way before they retire or way before they decide I want to be a VC. I mean, join one of these things when you're in college or when you first begin to work, and that way you're literally preparing yourself. Or if you think I'm retiring 10 years out, you get into one of these, and by the time you exit, you'll be prepared then to either start your own fund or join one. That's sort of what I did when I retired from IBM. I started PS27 the very next day.
Just like it. Was it already on your heart? Did you transition and you're like, oh, this is what I'm going to do now?
Yeah, no, I knew I wanted to do this. I didn't know it was going to turn into all this other stuff that we do, but I knew I wanted to work with entrepreneurs and and share what I knew. And this was a way for me to take what I had been fortunate enough to learn from others over the years and give back, and choose some companies and hopefully make some money. And it's been all of that and more.
Well, that is amazing to hear that it's been full circle and really fulfilling for you. So I only have one last question for you. It's our listener submitted question. We ask each of our guests to listener submit a question. We have a little small network of our listeners, and every time we have a new guest coming on, I kind of tease them with the guest, and I give people the opportunity to ask anything they want. This question is from an anonymous listener. He says, hi, Jim. I'm a startup entrepreneur who's raising his first seed round of investment. I feel very confident in my product and team, but if I'm being honest, I'm a little intimidated by the investor courting process. In your opinion, what is the best way to ask an investor to lead your round, and what should I be prepared to answer or respond to when I present my inquiry?
Yeah. Well, just listening to the question and understanding it, I think this person needs to first think about friends and family. So if you're intimidated, obviously, by people you don't know that are sitting across the table that are looking to, be a part of the company or take a part of the company, that can be intimidating. So I would start by presenting my idea to some friends and family. I'd get feedback from them. I would adjust accordingly. And by the way, some of your friends and family may invest. But I would go to as many as I could get to and present as many times as possible. I mean, over the dinner table, at the family, event, wherever you can track people down. I think the other advice would be, one of the challenges when you're first starting out is how do you compress your story into just a few minutes? And I would encourage them to concentrate on what problem am I really, really solving? And what is my solution and why is it different? If you can just concentrate your story into that. It was a company we worked with that started out. It was a young founder, and the problem they had was they couldn't get healthy snacks at college. And what they wanted to solve was healthy snacks in schools. They were athletic. They were thinking about eating. So the problem was the only things available is Cokes and Snickers and Pepsis and Cheetos. And that leads to all kinds of other issues. Obesity at a very young age, people unhealthy at a very young age, and a very bad lifestyle habit. So that was the problem. Let's solve that. But what's the solution? Well, a healthy vending machine. It's healthy only. Everything in it has been vetted, chosen, selected. And if you put those two side by side, most likely people are going to choose the healthy option if they have a choice. So that was their solution. The prices were the same. The products were different, only in that they were healthier. Now, I need X amount of money to buy my first vending machine. I think it was $10,000. I need $10,000 to get my first vending machine, and in 6 months, I will have made enough money to pay you back that $10,000. Would you invest in my company? I'll give you 10%. Now, that was like half a minute. But it's got to be problem, solution, what's in it for the investor? What are you asking for? And what's in it for the investor? Keep it simple. And then after a few practices, you're going to get confident. And then you go reach out to angel investors first. I wouldn't even go to a VC firm. I'd go to angel investors, angel investment groups, and I would present because they're used to higher risk and longer window for returns. And I present to angel groups, and then after I get that funding, then I would go to VC. So it's the VC is the third level of funding after friends and family and angels. So hopefully that will help them. If this person wants to reach out to me, I can give them a standard presentation that we give all startups. It's about 10 charts. We just say, fill in this template. This is what all VCs ask for, and you'll do fine if you follow the template.
Okay. Well, you guys heard that. So, Jim, could you tell everyone where to reach you, your website, on social media, and if they want to get this information, do they email you, or how would they go about getting it?
Yeah, just go to our website. PS27Ventures.com is our website. There's lots of information there. I would go, there's a contact us tab. Just, if you want to reach out to the firm or to me, just fill in the contact information and someone will get back to you same day usually. My email is jbs@ps27ventures.com. That's the fastest way to get me. And they should follow us on LinkedIn. I would just go in, search PS27 Ventures. You'll find us. Or look for Jim Stallings on LinkedIn and find us. And follow our story, because we talk a lot about the companies we invest in and their success and their challenges and events and all of that. So I would encourage, LinkedIn is a great resource for us to communicate what we're doing. So that's the best way to connect, okay?
All right, perfect. All right, well, thank you so much for coming on the show today, Jim. I think you're super insightful, and I think this will be very, very helpful for both people who are looking to get into VC or people who are looking to raise. So thank you for sharing your story, and I am grateful for you coming on.
Very good. Well, thank you so much, Amanda, for having us.
Thanks for listening to MVP. If you'd like to hear more from me or our guests, visit mvpodcast.substack.com for exclusive content, updates, and announcements. And if you love the show, please subscribe, rate, and review us, or follow us at The Amanda Spann at MV Podcast. Thanks again, and see you next week.